January 24th marks that date on the calendar, the date the IRS will begin accepting 2021 individual income tax returns. Nobody wants to pay more in taxes, so we'll get some advice on how you might be able to cut that bill either now or in the future from Ernie Burns, from Burns Estate Planning and Wealth Advisors. But also, before we get to that, Ernie, good morning to you. The Labor Department reported a short time ago that inflation in December was 7% higher than a year ago. For the same month, the highest inflation again in roughly 40 years. Your thoughts?
Yes, the highest inflation since 1982, and the feds have actually mismanaged this. It's not as transitory as they thought. That's why they last week came out and says there might be an additional rate increase this year to try to slow inflation down. So they understand that food and fuel and also large ticket items like automobiles are going to keep increasing because of supply chain shortages and because of this inflation issue.
So from a standpoint of wealth management, I like to approach questions like this from the point of view of two angles. One, if you're 35 years old and you're really getting serious about retirement versus if you're 63 years old and you're on the verge of it, what does this inflation mean? What's your outlook for this?
Well, first off, it's tight for you. You have a family of a couple of children, and you both are going to work. It's a two-income family now. It's not like 50 years ago it was a one-income family. So now it's more threatening to a middle-income family. It's going to be more out of their pockets for food and fuel. So what you have to start doing is, I'm sorry.
No, go ahead.
What you need to start doing is basically watching your dollars a little tighter. And in the same instance, if you're a little bit older, you make sure that you're saving proper. Common stock's the best way to fight inflation.
All right, so let's talk about, tax season is coming up. Nobody wants to pay more in taxes, so how do you cut that bill?
Well, a few things. First off, if your employer, if they offer a 401k, well, that's a huge plus for you because you're adding to it and they're actually matching it to a certain point. But unfortunately, that stopped December 31st for 2021. So if you want to lower your income from last year, you can't contribute to an IRA or a simple IRA, for example, or your SEP for last year. And you have different income levels. You have to look at talk to your CPA about that or your financial advisor. They can see there's different levels there, but that will come off your gross income. So if you're 50 and under, $6,000. If you're 50 and over, an additional $1,000, that's $7,000 coming off your gross income. And that can help you for 2021.
You always want to take advantage of whatever tax-deferred payment you can make in terms of those investments.
Mostly, absolutely, unless you're much older.
So it's $6,000 that you can contribute to an IRA up to age 50, and then what, an extra $1,000 above that?
Correct. Yes, sir.
Okay. So if somebody is already retired, what do they do to lower their taxes in the future? Or maybe the way to ask it is, if somebody's on the verge of doing so, what do you need to know?
Well, I was saying if you're older. So if you're on the verge of retirement or you're currently retired, you can do Roth conversions. You might not qualify to do a contribution to a Roth because your income's too high because you're about to retire, but you can do Roth conversions. We all know taxes are going to increase over the next several years. For the Build Back Better bills and other things that Congress and any Republican or Democrat wants to raise taxes in Washington usually. So the more that you can convert to a tax-free account as a Roth conversion, will help you in the future, so therefore you have a tax-free bucket to draw money from. You can always give us a call. We can give you more information about that.
Yeah, it's important to, if you can't do it on your own, either talk to somebody like yourself or at the very least be aware of these sometimes complicated rules because it can cost you a lot of money if you do it wrong.
Right, and there's no income restrictions for Roth conversions. You could be at the income level, you convert that IRA to a Roth. You're paying the taxes on it, but now that money is growing tax-free. And all that accumulation and dividends and interest is growing tax-free.
Gotcha. All right, Ernie Burns, excellent advice as always. Thanks, Ernie.
Thank you. You have a good day.